Mr. BP Singh, Executive Director and Chief Investment Officer with the Pramerica Mutual Fund. Mr. Singh, good morning. Thank you for joining us. 10% up for the small cap index in the April series. What's going on? Do you think it is time to exercise caution because the tiny toons have started moving up?
Good morning. Yes, one needs to be a little bit careful because what's happening at this point in time is that we have started factoring in practically every positive. Now, there are some negatives which are also on the horizon which are taking place. And when the market gets into euphoric phase, as we are now at this point in time, what I term as a hope and faith rally, everything starts running. Now, we'll have to be very careful because there are some who do not deserve to get the kind of valuation they are getting right now. But at the same time, there is a lot of undervaluation. So one will have to be very choosy going forward in order to remain in this market. We continue to believe that we are in a long-term 3 to 4 year of a bull market. But in the shorter term, I think there are some stocks or some sectors which are not supposed to be participating the way they are participating. So one will have to be careful. Now, to answer your query specifically between the small cap and the large caps, I think the rally, once the election results come out and depending upon what it is, in case there is not a very clear-cut strong government, then you will notice that the small caps actually will slightly have a halt in terms of its rally. But in case we find that there is a stable government, and in that case, people will actually go ahead and start picking up all those companies which are cash rich and will be able to take advantage of this opportunity.
Mr. Singh, off late the banking pack has really shown immense strength, and it's surprising to know that it's actually the PSUs which have come to the fore. You know, for the series, the top gainer has been BOB, and it's really spurt up in Thursday's or rather Wednesday's trading session as well. Do you like anything out of the PSU banking pack?
Well, let me at the outset say that we prefer the private sector banks more than the public sector at this point in time. And the reason for that is that most of the market at this point in time believes that a new government comes, immediately everything will turn around. Now, let me just point out a couple of issues which the new government will definitely have to face in terms of the various kind of financial situation which they are staring at. The oil prices have started to go up. Recently, just now, you were discussing about the monsoon not going to be very good. So if you put all these things in perspective, the new government will probably have a reasonable amount of time to solve these issues, and probably they will have to be as bold as they were in 1991 in order to take the decisions, in order to ensure that the economy gets back into the normal growth phase. So keeping those aspects in mind, I don't think there will be enough for the public sector banks. And in terms of the valuation support, which we were seeing, say, 2 months ago, now those valuation supports are also do not exist. So keeping that in mind, we are more positive in favor of the private sector banks.
Largest holding in your last declared portfolio is ITC. ITC is a very expensive stock. I know you cannot talk about ITC, but walk us through the logic in owning a consumer name or a consumer staple name as your top name.
Well, yes, we may call, though I would not like to comment on individual stocks, but let me just put it this way that a company which sells a kind of product which is inelastic in terms of its demand will not have an impact in terms of what happens whether there's a bad monsoon or whether there's a consumption demand slowing down. Now, you will have, and which we are of the opinion, and that's the reason why we have gone low on some of the auto stocks, we have gone low on some of the consumer stocks, but we have definitely kept a particular stock keeping in mind that the inelasticity of the demand for that particular segment exists, and the underlying growth which is taking place is definitely indicative of that, and so that's the main reason why we have kept a position on a particular stock.
Mr. Singh, I wonder who's buying into cement because there is no evidence of turnaround in the cement sector. Overcapacity is still large, but the stock price appreciation in cement, at least large cap cement stocks across the board, is quite breathtaking. So do you think for those who are buying into cement stocks at the current juncture, they're simply taking a big leap of faith?
Well, that's what exactly happening in the entire market. Now, if you look into the entire economy, there is nothing to indicate that there is a turnaround which is taking place. But in the underlying economy, what's happening is that there are large number of companies who are weak, who are selling out their facilities and being bought over by the cash-rich companies. And cement is a perfect example of that. If you look back into last 6 months, I can point out at least 5 to 6 such transactions where the weaker players are selling out their capacities and which are being acquired by the stronger players. What that means, that there are few players who are getting the consolidation in the industry, and as a result of the consolidation, the next step is the pricing power. Now, across the globe, when you see when the capacities gets consolidated in the favor of few players, the pricing power comes back and the industry gets re-rating. Now, cement is a perfect example of that, what's happening in the entire Indian market right now. You take capital-intensive industries, you take the cyclicals, you can't see much of a turnaround in the economy, but there's the faith that the consolidation which is taking place will result in a high earning growth, and cement actually in this particular point in time typifies that.
So are you a buyer in cement? Are you a seller in cement?
No, we are a buyer, and we actually at this point in time overweight on the cement sector.
For the longest time you've run a portfolio which was overweight on IT. Now that some degree of volatility has kicked in for IT stocks, do you think it's time to give IT a skip? I mean, IT typically does well when market conditions are choppy, but when markets are clearly in a risk-on mode, do you think a risk-off sector like IT could take a backseat?
See, we have taken a particular call at this point in time that last month the entire market started talking about rupee appreciating to the levels of around 54, 55. And that's the time when the central bank came up and they spoke about how they are working on the plans to sterilize the currency, and they are also ensuring that the rupee actually shouldn't appreciate too much. Now, in our opinion, if you compare the Indian currency vis-a-vis the other emerging economy currencies, I think the rupee at the current level, that is 60-61, is something where it actually cannot appreciate more from here onwards. So at this kind of exchange rate, when you compare with the last year, we are talking about at least 10 to 12% depreciated rate. And you look at the kind of growth which has started coming back in the US and the European economies. Now the IT on the valuation side actually looks reasonably attractive. So last month when the numbers actually, when the people were quite nervous, I think we decided that this is the sector where we should actually get in now, because it's a matter of time when people realize that the Indian currency is not appreciating. On the other hand, the central bank is actually is going to ensure that the currency remains at the current levels. At that point in time, the investors will actually start coming back to the sector.
And Mr. Singh, you've not been really all that bullish when it comes to the oil and gas space. Has the recent rally, which we've seen in not just, the OMC pack, but also Reliance and KN, at least in the run-up to the numbers, taken you by surprise? And would you change your view on oil and gas now?
Well, yes, the recent performance definitely surprised, but we don't think that we need to change view, because if you look at the crude oil prices in the global markets, they are actually still above $100. And as you were just speaking about the currency that it started depreciating once again. Now, if I combine the two with what will happen post-election, now, at this point in time in the election, the subject which is being maximum discussed is inflation. Now, a new government which comes to power will have obviously a lot of responsibility on itself to ensure that the inflation doesn't go up. For them to go on passing on this cost to the economy immediately may not be possible. So I think it's a lot of wishful thinking on the part of the market participants at this point in time that these companies are going to start benefiting immediately. So I think there's some negative surprise in store, and we are not revising our opinion over here.